In this video, we're going to talk about adjusting entries. So we've completed our journal, right? And we have the end of the month, November 30th. Our account title is totals, and we have all of our column totals from all the transactions over the course of the month of November. That is our fiscal period. November 1st through the 30th have yielded the following totals. Yes, my debits match my credits. We'll assume that cash is good. So we take these column totals and all the general information, and we put them into a ledger. We then take the ledger and complete a worksheet that has a trial balance that looks something like this. Now, as you can see, we had our net income, and that's great. So, one thing that this journal and the ledger do not know, if you'll recall, we have 5 steps of the journal, or 5 steps of the accounting cycle, sorry. We start with the journal, we then move on to the ledger. We use our information from the ledger to make the worksheet, specifically the trial balance. We then find our income statement and balance sheet based off this worksheet. So, we put these adjustments into the worksheet, but the journal and ledger don't know about these numbers yet. So we have to kind of go back and put these numbers in the journal. So here's how we're going to do it. We have, get rid of this, we have a journal here. And underneath this journal, we're going to put in the date as November the 30th. And we're going to put in this little accounting title called Adjusting Entries. Actually, we'll take the date out from here because we're going to put that in as its own little category. And in the journal now, we are going to reflect these adjusting entries. We're going to be specifically working in the adjustments column here. So we have 4 numbers here, and that's all that's going to go into this journal right here. The first one is supplies. So we're going to take supplies. It's probably account number 120, whatever. Let's call it 130. That's probably our supplies account number. Now, let's check this for a second. Supplies in the adjustments column has a credit of $339. As in the journal, every debit must equal a credit. So where else do we have $339? Well, we do down here for supplies expense. You'll notice that in this original trial balance, there was no supplies expense calculated. It only came about while we were doing the worksheet. So the journal does not know about any kind of supplies expense. Well, it will now. And we're going to put the $339 debit there. As you can see, we have a debit of $339. All right, we have one more transaction to do, and it's regarding prepaid insurance. Let's get this out of there because that's bugging me. Okay. Prepaid insurance. Up top, above the line here, prepaid insurance has a credit of $200. So we're going to put that in as a credit of $200, just like it tells us to in the worksheet. Down beneath, we have this thing called an insurance expense. Let's take a look. Same story as supplies expense. According to our trial balance, our journal and ledger don't know anything about an insurance expense. It wasn't included in our story until we made it to the worksheet after the fiscal period had ended, and we figured out how much prepaid insurance expired over the course of the month. So the insurance expense here is $200 to the debit side, but it's an adjusting entry because it wasn't one of the original entries. $200 debit here. And we can look at this very easily and know that our debits equal our credits here. And we have now put in some information that tells us about these adjustments we made in the worksheet. So now we've kind of briefed the journal on all this. As you recall, the journal is the first step. The next step is to brief the ledger about it, but we'll get there in another video. That's all for this one. very, very simple. We're just going to take information from the adjustment columns. There are 4 numbers here, and we're going to put them here into the journal. So now we see supplies losing $339 worth of amount. So that's a credit. Supplies expense getting the corresponding debit. Pre-PPI losing $200 worth of value. Insurance expense getting $200 with a debit there. So these are adjusting entries. Our next step is going to be closing entries, which are a bit more intense, but really not too bad. And we're going to cover those in the series of videos coming up.